This is the accounting equation in 7 minutes and 51 seconds. Let's go. In our universe, there are many mysteries. How do galaxies form? Is there intelligent life out there somewhere? Will we ever keep up with the Kardashians? And do we care? Not really, no. But there is one mystery that must be solved. It turns chaos into order and brings balance to our books. It balances our books. It's the accounting equation. Universities devote hours to the careful study of this mythical maths, but we're going to solve it in 7 minutes with the help of a gymnast, exactly one Jedi Master, and a plate of cookies. Let's go. To do this, we're going to need to go to my favorite place, the kitchen. Now, the accounting equation in plain English means that what a business has will always equal what a business owes, or in other words, assets equals liability plus owner's equity. So let's look at each of these categories. So assets, for example, might include things like cash at bank, accounts receivable, as in the money other people owe us, usually for the purchase of our goods or services. It also includes our stock on hand or inventory. It includes any equipment our business might own, and also includes things like land and buildings and property that we might control. Now, on the other side of that equation, we have liabilities, which are things like accounts payable, money that we owe for services we've purchased. Includes loans, and they might be to banks or other related parties, directors, shareholders, or other interested entities. It includes things like payroll liabilities for our salaries and other employment obligations. And it can include tax, like income tax, GST, or sales tax if you're in another country. We also have equity, which includes shareholders' capital, which is the purchase of any shares of the business, plus owner's equity, so any money the owner of the business might have invested in it. And then we have retained earnings, which is the accumulated profit of the business that's sitting there waiting for future use. Now, all of these can be seen on a balance sheet, which is a picture of a company's position at a fixed point in time. So on the left, we have those assets. On the right, we have the liabilities and owner's equity. So everything the business has, everything that owes either to other parties or the owners of the business in the case of owner's equity. Now, a balance sheet is one of the core reports that you're going to work with, and it'll tell you so much about the health of a business. So let's dive into it a little deeper. And we're going to do that with an example. So this is Cece. She's my daughter and a shrewd businesswoman. If you've ever had to buy a fake ice cream at a playground or your child's artwork at a school auction, you know exactly what I'm talking about. There are cheaper Monets on the market than those pictures of kookaburras. But fortunately, she's decided that she wants to open a business. So she's broken open her piggy bank, cashed in her money from the Tooth Fairy, and now she has $3. With it, she's planning to sell cookies. So either she's been on the internet or she's hungry. Either way, now she's in business. Let's take a look at how the accounting equation functions in her business. So she starts off with $3. Now, we're not going to dig into debits and credits too much in this video, but every debit must have a credit. So when something happens on the left of this equation, there's always going to be a corresponding action on the right-hand side of it. Okay, so we've got $3 cash on the left, and on the right, well, we know it was her money, so that's owner's equity, right? And we have $3 there. See how it balances? And it will always balance, just like Simone Biles. Now, unfortunately, inflation's been running rampant, and her Tooth Fairy money doesn't have the buying power it once did. So enter the Bank of Dad. Now, he loans her another $3. Now, if we take a look at our balance sheet, we can see that we've got $6 in cash on the left, and $3 in loans, and $3 in owner's equity. And we balance. Now, you can't have a business without a product, so Cece heads out and buys a box of cookie mix for $5. Now she has $1 in the bank, $5 in inventory. Then on the other side, she has $3 in loans and $3 in owner's equity. See how we still balance? Now, because 7-year-olds are masters of the markup, she manages to make, bake, and sell those cookies for $9. So we add that $9 to the $1 she had left over. Now she has $10 cash in the bank. She has no stock on hand because she sold them all. So we have $10 on the left-hand side of the equation. And the right-hand side, we know she's still got the $3 from loan from Dad. She had $3 of owner's equity, but that doesn't balance.
You were the chosen one! It was said that you would destroy the Sith, not join them! Bring balance to the Force, not leave it in darkness!
Why? Oh wait, the profit. So if we bought our cookies for $5 and we sold them for $9, we know that we have $4 in profit. So this goes over to our retained earnings, that profit that we're holding on to for future use. And now, as you can see, we have $10 on the left, $10 on the right. We balance all over again. Now, we could do a lot of other things with this to show how different transactions impact the balance sheet. For example, if she repaid the Bank of Dad, we would now have $7 in cash, $0 in loans and liabilities, $3 in owner's equity, and $4 in retained earnings. So to recap, the accounting equation tells us that what a business has will always equal what it owes, or assets equals liabilities plus owner's equity. Every debit has a credit, or when something happens on the left, something equal also happens on the right. We're going to dig a lot deeper into debits and credits in our next video, so hit that bell icon to get notifications for that one. If you've enjoyed this video in our Accounting Explained series, be sure to leave a like. If you have questions or want us to cover something specific, let us know down in the comments, and we'll see you next time.
You want to buy some death sticks?
You don't want to sell me death sticks.
I don't want to sell you death sticks.
You want to go home and rethink your life.
I want to go home and rethink my life.